Look at the boards. Gas prices are hitting record highs again, and every time they do, the wealth gap shifts. While most people complain about the cost of a fill-up, the top 1% are pivoting. They aren't just buying EVs, they are building the infrastructure that powers them. Welcome to Core Capital. Today, we aren't just talking about saving money, we're talking about owning the future of energy. We are breaking down exactly how to start an EV charging station and a solar energy business in the US in 2026. This isn't about saving a few bucks at the pump. It's about recognizing a massive economic shift. For decades, fortunes were made in oil, but now that old model is showing its cracks. Every time you see a headline about oil price volatility, with companies like Chevron and Exxon stocks swinging wildly, remember this: that uncertainty creates opportunity. This is what we call the volatility trap. Consumers are getting tired of unpredictable energy costs, and they're desperately searching for stable, cheaper alternatives. And that's where innovation comes in. The pivot to electric isn't just a trend. It's a fundamental change in how we power our lives. And here's the best part: you've got powerful allies pushing this change forward. The government is creating massive tailwinds for this industry. The Inflation Reduction Act, or IRA, is a game changer. It's not just a piece of legislation. It's a financial launchpad offering huge tax credits and grants for building out clean energy infrastructure. We're talking tens, even hundreds of thousands of dollars in incentives. States like California, Texas, and Florida are leading the charge with their own programs, making it even more profitable to get started. Think of it as the government co-investing in your business. The market is screaming for this. Let's look at the adoption curve. Right now, we're at the tipping point. Projections show that by 2030, we'll see over 30 million electric vehicles on US roads. That's a staggering number. And every single one of those cars will need a place to charge. The demand for charging infrastructure is set to explode, but the supply is lagging far behind. Demand is where fortunes will be made. It's a once-in-a-generation opportunity to build the gas stations of the future. The question isn't whether this will happen, it's who will be the ones to build it and profit from it. So, why now? Because the market is ready, the government is paying for it, and the competition is still low. This is the moment to get in on the ground floor. So, you're ready to build. Let's start with the EV charging station blueprint. First, you need to understand the two main business models, which depend on the type of charger you install: Level 2 or Level 3. Let's talk about Level 2 chargers first. Think of this as the destination model. These chargers are slower, taking a few hours to fully charge a vehicle. They are perfect for places where people park for an extended period. Imagine installing these at hotels, shopping malls, movie theaters, apartment complexes, or office parks. The initial investment, or CAPEX, is relatively low. You're not trying to be the fastest. You're offering a convenient amenity. Drivers will happily pay for a charge while they shop, work, or sleep. 2. This model generates a steady, reliable stream of passive income. It's a fantastic way to enter the market without a massive upfront cost. Now, let's look at the other side. Level 3 chargers, also known as DC fast chargers. This is the gas station model. These are the SUC chargers. They can power up an EV in as little as 20 to 30 minutes. Their ideal location is along major highways and busy travel corridors, where drivers need a quick top-up to continue their journey. The investment here is significantly higher. These units are expensive, and the installation is more complex. But the potential for profit is also much higher. You have high customer turnover and can charge a premium for the speed and convenience. This is for entrepreneurs who want to scale big and capture the high-traffic market. Okay, so how do you actually get started? The first step is site acquisition. You don't necessarily need to buy land. The smartest approach is to partner with existing businesses. Approach that local mall owner, the hotel manager, or the commercial real estate developer. Propose a partnership where you lease a few of their parking spots. It's a win-win. You get a prime location with built-in traffic. They get a modern amenity that attracts more customers, especially the high-value EV driving demographic. You can offer them a flat lease fee or a revenue-sharing agreement. Once you have a site, you face the next hurdle: permitting and utility hookup. This can be the most challenging part. You'll need to navigate local zoning laws and building codes. More importantly, you have to work with the utility company. Whether it's PG&E in California or Con Edison in New York, you need to ensure the local grid has enough capacity to handle the load of your chargers, especially for power-hungry DC fast chargers. This often requires engineering studies and potentially upgrading the local electrical infrastructure. It's crucial to start these conversations early in your planning process. Finally, let's talk about software and networking. Your charging station needs a brain to operate. It needs to process payments, monitor usage, and manage the customer experience. You don't need to build this from scratch. There are fantastic white-label software providers out there. Companies like ChargePoint or EvConnect offer networks and software that you can brand as your own, too. They handle all the back-end complexity payment processing, customer support, and network management for a subscription fee. This allows you to focus on what you do best: finding great locations and expanding your network. Choosing the right software partner is key to creating a seamless, user-friendly experience that keeps drivers coming back. Thanks for watching. If you found this breakdown helpful, make sure to hit that like button and subscribe to Core Capital for more insights on building wealth in the new economy. We'll see you in the next video. Alright, let's talk about building a real solar energy empire. Forget just putting panels on your neighbor's house. We're thinking bigger. We're talking about commercial solar. This is where you transition from being the person on the roof to being the brain behind the operation. It's about becoming a solar consultant or a project developer, the one structuring the deals, securing the land, and putting the pieces together. This is the solar as a service model. You're not selling panels. You're selling a financial solution, a way for businesses to lock in lower energy costs for decades. You orchestrate the project, bring in the installation partners, and take a developer fee. It's a high-leverage, high-award game. And what about the millions of people who rent their homes or live in apartments and can't install their own panels? This is where community solar comes in, and it's a massive opportunity. Imagine you build a solar farm, a field full of panels soaking up the sun. You then allow people in the local community to subscribe to a portion of that farm's output. They get the benefits of solar energy, lower electricity bills, a smaller carbon footprint without any of the upfront cost or hassle of installation. They're essentially renting a piece of your solar farm. You become a mini utility provider, generating clean energy and collecting monthly subscription fees from hundreds or even thousands of customers. It's a win for them, a win for the planet, and a huge win for your bottom line. Now, let's get into the numbers, because this is where it gets really exciting. The government wants you to do this. The biggest incentive is the Federal Investment Tax Credit, or ITC. Right now, it's a massive 30% credit. Let's break that down with a simple example. Say you're developing a commercial solar project for a local warehouse, and the total cost is $100,000. Thanks to the ITC, you or the project owner gets a $30,000 tax credit. That's not a deduction. It's a dollar-for-dollar reduction of your federal tax liability. Sell. That $100,000 project effectively costs you only $70,000 right out of the gate. This single incentive can dramatically boost your project's return on investment and make deals possible that otherwise would be where, when you start scaling up to million-dollar projects, that 30% credit becomes a game-changing amount of capital that you can roll into your next venture. So, how do you fund these bigger projects without having millions in the bank? This is where our CORECAPITAL strategy comes into play. You leverage other people's money. The U.S. Small Business Administration. The SBA offers loan programs that can be used for green energy projects. These often come with favorable terms because the government wants to support renewable energy. Beyond loans, there's a universe of green energy grants available at the federal, state, and even local levels, too. These are non-repayable funds specifically earmarked for projects like the ones we're talking about. You just have to know where to find them and how to write a compelling application. Combining an SBA loan with a few strategic grants can significantly reduce the amount of your own capital you need to risk, or even eliminate it entirely. Views: using public and private funds to build your own private infrastructure assets. Of course, no business is without risk, and it's crucial to be smart about it. Let's talk about the big three and solar. First, technology obsolescence. Solar panels are getting more efficient every year. What's cutting edge today might be averaging 5 years use. Mitigate this by using high-quality, bankable technology from reputable manufacturers with long warranties. Don't cheap out on the core components. Second, maintenance costs. Panels are durable, but they need cleaning, and inverters can fail. You plan for this by building an operations and maintenance budget into your financial model from day one. Set aside a small percentage of your revenue each year for upkeep. This ensures your asset continues performing at its peak. And third, changing regulations. Tax credits can change, and state-level incentives can be modified. The key is to stay informed and build a network of experts. A good lawyer and accountant who specialize in renewables are worth their weight in gold. They'll help you navigate the regulatory landscape and structure your deals to be resilient to policy shifts. The trend is clear. Oil is the past. Infrastructure is the future. Every day, you have a choice. You can either be the person paying the ever-increasing utility bill, or you can be the person collecting the check. The world is being rebuilt with clean energy. You can be one of the builders. If you want the full PDF guide on U.S. green energy grants for 2026, comment power below. Don't forget to subscribe to CORECAPITAL for more high-level business breakdowns. The future belongs to those who build it.